Hello, all. Good evening. So, welcome to today's index analysis. So, let's get started. Uh, as I mentioned in the thumbnail, that smart money, they were carrying bearish positions. So, first, let's start with the EOD data. So, we discussed yesterday that the fall is still pending because of the open call rating positions. So, when you look at FI DI data of yesterday, you can use any platform to see the data. So I'm using the stocks factor because the presentation is very good. So you can see here that the FIs, when you look at FIs, sold calls is very bearish condition. They sold calls, and they bought some. I mean, they also sold puts, which is very marginal. You can kind of ignore this number, right? And then when you look at prop desk, so prop desk has gone extreme bearish because they know the since Progress usually follows the FIIs and take the direction accordingly. So even Progress went along with FIIs to short even more calls, and interestingly they bought a lot many puts. So overall this makes the entire situation pretty bearish. So when you combine both the Progress and FIs, you see here that the combined positions becomes extremely bearish, where there is more than 2.5 lakh worth of calls being shorted and 2.74 lakh worth of puts being bought. So this is pretty much bearish situation. The interesting part here is when we combine this data with the client data. Now the client have done exactly the opposite thing. So you can see here that clients have bought calls and sold puts. So why this is very crucial is because just have taken the same screenshot and the paint. So you can see that the smart money on one side they sell calls and they buy puts, and the so-called dumb money, as we call retail, uh, who take opposite positions, they have bought calls and they have sold puts. Now this is where the transactions are happening. So in any market there are buyers and sellers, right? So but the direction or the way in which the market or who is controlling the market depends on in which side the strong player is, either the players on buying side or selling side. So now you come to the conclusion that the strong players, which is the smart money, is on the bearish side, and the dumb money is on the bullish side. So it is when this happens, when the data is very close, it is most likely that the market will take that direction. It is like an open. It's like when the positions are made in such a way that you get for every buyer, for every buyer has a seller. So in that context the transaction is like it's perfect matching of the transactions, right? So this is the case which happened on Friday also, where smart money were on the bullish side and the clients were on the bearish side. Even in that case you can see on Monday that the market went up. So today again, I mean, yesterday's data was again pretty much clear at what it's about to do, because the magnitude, even the quantum matters. The quantum of calls being shorted and the puts being bought by the smart money was way higher. So and accordingly even what the retail people had done was also way higher. So this is where it was very clear that the market was expected to go down as per the smart money's position. So I hope this EOD is very clear, because this is almost uh, openly given the direction for today's market. So coming to the OI front first, when you look at the OI data, let us first look at the Nifty's OI data. So as we discussed that there are smart money has shorted the calls and they have uh, you know bought puts. So now, so data also has to be seen from the same bias, right? When we look at the first initial few 15 first 1 hour, you can see that there are both calls and puts being written, and slowly you can see that the call rating increase and the put writing gradually reduces, and the first sign is the unwinding, which gives the clue that what is about to happen. So put unwinding, consistent put unwinding along with consistent call rating. So this is what expected, because from the yesterday's EOD position to continue the direction. So they'll further increase the writing and the put unwinding, so that the market heads one single direction, and post that you can see that the market almost the fall is almost done. You can see that once the writing or unwinding dries up, that is where you come to a conclusion that okay, fine, the writing or the bottom for the day is almost done. So post that you can see hardly any OI data, and in the end you can see this unwinding happening. So this is what I was mentioning, that you should see such unwinding prints, uh, uh, be it call unwinding or put unwinding. Today there was more call writing. There you can see more call unwinding taking place, right? This is what I explained, that yesterday there was not there was not any, there's not much call unwinding towards the end. So you can see here that yesterday, this was yesterday's data. You can see here that yesterday there's not much call unwinding. This, what does this mean? It means that the smart money are carrying the call writing positions, and that is what is reflected in the EOD data which we just discussed. So it is like that. So the whatever writing positions we see are the writing positions of the smart money which they carry forward from yesterday. So overall, I think the OI was pretty much clear as per the OD, and it continued. And once the no writing as well as put unwinding stopped, we could get some conclusion that the fall has almost stopped. Now it's anyone's guess that since the call unwinding, the writing positions have been unwound, where the quantum of unwinding has to be confirmed with the EOD data, and then post that we can come to some broad bias for tomorrow's expiry. Coming to Bank Nifty, you can see that Bank Nifty also has a similar data. Call rating and put rating both were visible. This doesn't give any direction, but then you can see call rating taking more precedence. But we must wait for any unwinding. Unwinding is the clue, the first. So you can see consistent put unwinding and put unwinding and consistent increased call rating. So again, the Bank Nifty headed downwards, and post that you could see just like Nifty, it went almost sideways. And then what happened is you can see call unwinding also. So because there's call unwinding and there is a put writing which started, you can say that the whatever writing positions they're getting covered in the market, just to some extent post from the bottom, it closed towards the top. So this is how the intraday OI confirms the EOD OI bias, and market flows in that direction. Now coming to the order flow, as we can see from the chart itself, it's fairly evident. First, maybe 1 hour was pretty, I think, sideways, getting ready for the fall. But the order flow also was hinting that it's not bullish either, because the delta you can see is very less here. So it's like sideways delta. Delta numbers you can easily make out. It's very sideways delta. But post that you see the delta suddenly increase on the negative side, where price started to started to break the first 15-minute candles range. So delta increased, and again went sideways. There's not much action again on the other side, so which confirms that the highest delta on this side is still lesser than the first highest print. 13k you saw here, it is just 12k, so not much um, on the upside momentum. So and post that you see the hypothesis playing out that the delta keeps on increasing. So now the direction is almost clear that when the delta increases, with all this discussion we had, call rating and put unwinding, so now the market is heading downwards. So yeah, the increased delta confirms the direction, and you can see one more big print, and then it sustains, the red print sustains, and ultimately I think it was this doji which was the final stopping point. And classical candlestick theory also says that doji at the bottom of the falling trend is a sign of reversal, and you could see the same old theory playing out today, that doji uh, at the bottom and accompanied with the delta, where you could see that the negative delta is getting absorbed now. So negative delta is getting absorbed. Again, you can see negative delta getting absorbed, and then the delta increases on the positive side, but still it is sustaining there. Not much increase. It is just sustaining. And with this negative delta, also the price is not able to go up and down, and then you can see increasing. These are just the shorts being closed, as we could see in the OI, that there was an unwinding of positions, and then accordingly the price just went higher because of the unwinding. So this is about Bank Nifty's order flow. Let us just quickly have a glance at Nifty's order flow. So Nifty's order flow also was pretty much similar, but Nifty's first candle itself was negative from the order flow perspective, as well as the candle compared to Bank Nifty. Did some minor pullback, gathering some more liquidity for the fall, and you could see that the delta started to increase here. Same thing. And then this was very unusual, where you had a very high max delta, but the delta almost lost. I mean, from 210k to 27k, it's like it has lost the entire maximum delta. So this is also confirming the bias that the price is not heading upwards. So although the candle is a small hammer type of candle, and you could see the increasing delta is massive, red delta, and then the price almost with this, again doji, nifty found a base. So just mark the low of that, and then you can just confirm the hypothesis through order flow that this low, if it is not broken, then the low of the day is done. And also you could see some delta, green delta coming up, and with this increased or the same delta, you could see that the price is not sustaining below. Right, it's almost the same. Here you could see a big red candle, and here the candle is almost a red doji at the same demand level. So you could confirm that with increased selling also, if the price is not able to move down, so then this is definitely a low for the day. So accordingly, the price just spent some time here, and then the shorts were closed, and price closed somewhere towards the highs. So overall, as per the data, the market played out perfectly as per the smart money's data, and that is what we must follow to get the direction, right. So anyway, it can be anybody's guess about today's data that there could be some call shorting positions being closed by FIs and DIs, FIs and prospects. So coming to the price chart, see, when today's price chart is interesting because first let me discuss Nifty. So when I remove today's action, so let me start from where we did, where we were yesterday. So this was the earlier swing which we had taken to consideration, and we discussed that the price closed at around the 60.618 level, and the fall is further pending because of the bearish positions of I mean open call rating positions. So now what happened? This is our swing low, and this is our swing high. Right now, just see what happens. Um, I'll just play the price action. The first candle itself goes below the 0.61. It means it's not bouncing immediately. It has closed below. So it means the price is coming towards 0.786 level. That's the first point. And then once it breaks 0.786 also, it definitely means that the price is coming towards the same swing. So the chances of it coming and testing this swing increases. So you can see that the price broke the swing also. Now once this swing is broken, uh, once the this swing is broken, this swing is invalidated. This is no more this swing becomes invalidated, and we have to go for the previous swing low. So for people who are asking how to draw this, this is one way. So you must shift the swing low to the earlier swing low, this level. So now you find that from this high, this low to the same high, the price now has no, retraced 70, I mean 0.78. Let me first finish the, yeah, it is somewhere closing around that 0.786 level, and yeah, it takes support around 0.786 zone. So Nifty has given a fair bit of correction, where for this um, swing it has given 0.78 in a correction, which is a pretty deep correction, and also healthy, because if it has to go further higher, then such corrections are necessary and normal in the market. So this is what is the current position of the swing. So, and then coming to Bank Nifty, Bank Nifty also, let me remove today's action so that it is clear. So you can see that this was the overall position, as we discussed yesterday, that Bank Nifty was above 0.382 and was relatively stronger. And since the positions were open, we discussed that Bank Nifty might take a bounce from here or from the 0.618 level. But what market did is, market went a bit forward. Let me just start it. Yeah, you can see first it broke the 0.382 level, and then it, in one shot, it broke all the three key levels: 0.382, point 0.5, and point. So now once it breaks all these three, it is anybody's guess that the price will head towards the next level, that is 0.78 level. So 0.786 level. So I think yeah, when you see, yeah, it reached here, and then it took bounce. Doji forming at this level is a confirmation of the that it is taking support here, and this is a doji mined in the hourly time frame, so it is very much stronger in that context. So and then price closed above. So again, just like nifty, bank nifty again is relatively stronger, and it has also taken the support from 0.786 level, and it is going up. So overall, why the markets took this bearish turn? If you broadly come to the macro analysis, the analysis lies in the dollar. So now, as we keep discussing dollar finally has broken the 0.38 retracement level, which we discussed on the daily time frame. So let me first show that on the daily time frame chart. Yeah. So on the daily time frame, this is what we were discussing. The dollar is or has broken the 0.38 retracement. It consolidated here, and today it broke the it did not get rejected. In fact, it went higher. So this is what we discussed, that if dollar goes up from here, it is negative for equities, and we might go lower. So that's what is happening. But still, market dollar is going up in anticipation of the US debt ceiling issue, the debt ceiling negotiations, which are currently going on. So if the negotiations are complete, and if the Congress and Senate come to the conclusion, I mean the Republicans and Democrats, if they come to a broad understanding on the debt ceiling, and if they increase the debt ceiling level, I think the issue should get sorted, and the dollar should ultimately head back. Maybe it could take a resistance from point 0.5 and head back, or in some cases it can also go towards 0.618 and also head back. So this is what I am foreseeing as a scenario. Chances are very unlikely that US might fail to negotiate the debt ceiling levels. So that is the biggest news as of now, the debt ceiling negotiations. So hopefully the issue might get sorted in a couple of days, or if it drags further, then markets might remain very choppy. So this is what is the current situation. And today also intraday, markets played perfectly to the macros, because as the going dollar index was going up, so we were going down. So again, another classical intermarket analysis theory, where the bond markets react negatively, I mean positively, and the equities react negatively. So this was about the dollar, and yeah, overall, uh, as of now, and even the when you look at the Dow futures, also Dow future was pretty much flat, and then it started to rise up. So this is where we stopped falling, and we went a bit higher. So the situation as of now is the debt ceiling issue to get resolved. That is what the market is currently awaiting. So yeah, that's it. I hope this analysis was helpful. Thank you.